Welcome. This is James Duerr, your host for the 7 steps for financial success. And one of the steps in the James Duerr 7 steps is real estate. And we like to have guests on our show that are experts in the area. And today we have a guest on multifamily investing. We have Paul Montelongo. Hey, Paul, how you doing today?
I'm doing good, James. How about yourself? You said that right.
I like that. I mean, usually what I do, I just say, hey, Paul, and then introduce yourself, and then Montelongo. So
I would say it Montelongo.
Montelongo.
But you did it perfectly.
Oh, I like that. So what is, real quick, what is that? Italian?
Spanish by way of Northern Italy.
Oh, there you go. There you go. So we have an expert in multifamily. I was actually privileged to be able to attend one of his seminars that he has monthly on multifamily investing. And we just want to have a conversation today about it, just to kind of do a brief introduction to multifamily. And we want to say, you know, in the first place, Paul, Paul is a real estate investor and a mentor. And really what came over during the meeting the other night was he really wants to be your mentor. So if you're looking at multifamily and, it's nice to have single family investments and all that, and homes and duplexes and all that. But if you want to get to what I call amigo money, you got to kind of put the bar up a little bit more.
Mojito money,
yeah, you get lots of mojitos with it.
I get it.
But if you need a mentor to get to the next step, Paul is definitely that person. And so let's talk to us. Why would the individual investor or a group of investors get into multifamily investing?
Yeah, great question. So, the answer comes from my personal story. And for years, I did single family investing.
Right.
One-offs. Mm-hmm. Buy a house, flip it, fix it, flip it. Buy a house, fix it, rent it. One-off.
So that pretty much consumes all your time when you're doing
consumes your time, and you're always in the hunt for that one-off deal.
Okay.
So then, a number of years ago, I got this epiphany that why not buy one property that has multiple doors? And so that led me to multifamily. Now, there are a lot of different kinds of multi-unit properties. Mini storage, marinas, which I bought. Mm-hmm. But now I focus...
even storage facilities.
Storage facilities, RV parks, office buildings, mm-hmm.
Mm-hmm.
With multiple rent sources.
So anything is multiple rent, commercial type property, whether it's housing or it's office building, it's you lock it, rental.
Exactly.
I would have never put that in this category.
Well, multi-unit, you got a bunch of streams of revenue coming at you one time.
That's the main thing.
Yeah, why that was attractive to me, multifamily apartments specifically, which is what I'm in now, mm-hmm. Close to 500 units. The reason is that it seems to be, while nothing's really recession proof,
right.
It seems to be recession buffered. In that if and when an economy dips, one of the first things to go is housing and mortgages, and there are foreclosures, and people don't qualify for mortgage, et cetera, all the stuff that goes along with normal housing, mm-hmm. but they need a place to live.
Right.
And so that place to live typically is either rent houses or apartments. Mm-hmm. And so while the values of properties can fluctuate, just like any real estate in an economy, it seems to be buffered, or it seems to buffer itself from a loose economy because it is a place that people need to live, and there are multiple doors to it. So that became attractive to me, and there's an inherent occupancy safety net with it. Let me give you an example. If you have one house that you rent out,
right.
and that renter, for whatever reason, decides to leave, now you have zero occupancy. You have 100% vacancy.
Right.
If you have an apartment complex with 100 doors, mm-hmm. and 10 people leave, which is unusual, you have a 90% occupancy or 10% vacancy. And at 90% occupancy, you can still pretty much, you can cover your debt, your mortgage, your maintenance costs, all that business.
Right.
There's formulas, right? But at 90%, if 10% of your people leave, you still have 90%. Yeah, you're still good. So that part of it became attractive to me.
So does a listener out there need to have real estate experience to get into this?
It's always good to have real estate experience. Mm-hmm. Like the more experience you have, the better understanding you have of the transaction and the deals. You don't have to, though. So a lot of the investors that invest with us, they don't have any real estate experience to speak of other than they bought their own single-family residence. Mm-hmm. A lot of people are the tech industry. A lot of people are in the medical industry, physicians, dentists, and so forth, and they just know inherently that real estate is a good investment. And so they've made their money in this other sector, this other industry.
Right.
They have some investable money, and they put it in real estate.
So I have a business. And I have expendable income. I want to invest, try to get a little higher rate of return. And James Duerr 7 Steps, we have the safe money. So once you have the safe money, then you can invest in the higher risk, higher reward opportunities like this. So if you do I need experience like being a money manager or being able to be a finance guy to get in this business of multifamily?
Not really, but I would say this: if you're going to invest, and by the way, these properties are $1 million plus, which is one of the big objections people have to get it, to get into these multi-unit properties. It's like, oh, $1 million. Well, I mean, we're buying 9, 10, 17, $22 million properties, and the numbers get big, but the principles are the same in basic real estate. And I would say that the better understanding a person has of money management, of money matters, of business, if they have any business acumen whatsoever, they'll understand.
Okay.
They'll understand the nuances. They'll understand the portfolio, the operating agreement, the summary. They'll understand the technicalities of the business to make a logical business decision.
And what if they don't feel comfortable?
With what?
If they don't feel comfortable on the money side of it, reading a profit and loss statement and things like that.
Well, that's where the acquisition team, my team, the managing team of the property, go in and help investors get educated about what those numbers actually mean, and more importantly, what it means to them getting their money back with some money on top of their original principal.
So as we said before, you could be their mentor and help them on the...
Yeah, I think that's a good point that you made, and it's like there are a lot of people in the business that are just buyers and acquisition people. I've paired with it being a mentor, because I had people mentor me, and I feel like it's important to help others. And by the way, I still have mentors because I don't know everything, but I go ask.
Yeah.
Right?
So how much money you typically need to get into multifamily?
So if you're an investor, if you're what we call a passive investor, in other words, you're coming in with just a block of money to hand over to an acquisition team in order for them to invest it. Typically, it starts out at about $50,000.
Okay.
The average investment is around $100,000. We have some that are 75, 100, and then up. But I'd say 50,000 is the minimum, and then it goes up from there. So you can buy a share.
Right.
And then you can add to that,
Right. On the same property or maybe on
the same property? On the same property.
So you actually can increase your percentage?
They're positioned in, like your $50,000 in your example here buys you one share.
Right.
Okay. And then for every $1,000 that you invest beyond that, you get another share or another piece of a share.
All right. Okay.
And so, if you've got, it doesn't have to be in even numbers, but if you've got 57,000, that's doable as an example, right?
And yes, it's good not to have lazy money.
That's exactly the point. I mean, lazy money.
$7,000 or $10,000 in the bank, keep it in the bank for 10, 20 years, you lose a heck of a lot of your money due to inflation.
Absolutely.
People don't realize that.
It's just dead. It's just dead money. One of the things that we teach and mentor our investors with is so many people have IRA accounts. Right, and those IRA accounts, the money sitting in those IRA accounts, they're just making single-digit percentage, low single-digit percentage. And fortunately, right now, it's a little bit better.
Right.
But a few years ago, it wasn't.
No, and you have the timing risk in the market, as you do in real estate. But
and it's lazy money, so there is a way to self-direct that money out of your IRA into a legitimate real estate investment. The IRA works with the investment pays back the IRA, and you get the benefits of having that money in your IRA like you always would, your withdrawal conditions and the percentage and all of that. So if people have, that's a huge thing, because people have that's lazy money. If people have that kind of lazy money, they can put that money into a real estate investment and grow, because that's their retirement account. That's money that they pretty much weren't going to touch anyway until they're 59 and a half or older.
Right, exactly.
That's a way to grow your wealth.
And then, I mean, I know you feel the same thing. You're not a CPA, right?
I'm not a CPA. I'm not an attorney. I'm an investor.
Right. So we always, we have people. The James Duerr Show. We can refer people to for CPAs, for lawyer, for attorneys. So we're, you have certain talents. I have certain talents, and you want to build a team.
Right.
And on that. So I just wanted to bring that out, and, a little disclaimer, you always want to say that.
Yeah, that's perfect.
But
To that point, always do your own due diligence. Get your professional people to give you their professional advice.
we got another minute and a half. So what about, leveraging your money? I mean, how does that work? So if I have 100,000, how do I get
Yeah,
into
there are
a
multiple
deal?
ways to that, and the short answer to that is there are multiple ways. You can put your cash into an investment. You can put your cash into an investment as a cash partner, as a credit partner, as a manager, as an executive, because you have business acumen. So there are multiple ways for you to leverage your talents
Right.
and your money to get into a multifamily real estate investment. You just got to find a group of people that know the business, that know how to buy a property at the right price, know how to rehab it, know how to build the equity in that price. Because at the end, the big thing is, this is a 5 to 7 year investment usually.
Right.
At the end, you want to have built equity so that everybody gets paid when that property is resold as an investment later.
Okay. So when you get into a deal, you kind of have a set price that you want to get to.
Absolutely.
That you have an exit strategy.
Absolutely, and all that's disclosed, and there's formulas, and everybody knows, okay, if we bought a $10 million property in 5 years, our target is $15 million. So we're all working toward, as an example, we're all working toward that end goal, that end
Well,
game.
Paul, how can somebody contact you if they have questions on this?
Yeah, the best way is, first of all, text the word legacy, no punctuation, doesn't matter if it's capitalized or not, legacy, text it to 66866. And I've built a web page there on my website. It's got a lot of free resources. PaulMontelongo.com.
Okay, Paul, I appreciate it.
Plenty of material there.
And if you need any more information, go to jamesduerr.com, and we'll have the interview on there. And thanks for being here. Hope to have you again.
Yeah. All right. Thanks, James.